Hello again, traders. Right, you are looking at a demo account on who is it? FTMO, their practice account, and you are looking at ETH, and you are looking at a video that I'm making at roughly 4 AM on Saturday morning. Forget what it is, May 20th, something like that, May 21st. And last night when I got home from being away from the computer, I actually opened up, the markets were closed, and I opened up my demo account on FTMO that I'm practicing with at the moment to have a look at what goes on with cryptos over the weekend, because it seems that all brokers are different. One of my brokers, IC Markets, has strange ways of working out the pips and trade sizing and leverage and stuff like that. So this is the beauty of demo accounts, and hopefully also the reason for making this video is if for anyone that actually deals with FTMO, whether people have said in the past actually that the demo is almost or is identical to the live trading account. That isn't often the case, but if that is the case, that's useful. So but something that's really worth making this video about is that if FTMO's live account is the same as their demo account, especially where cryptos are concerned, I don't know how they've done it or what they've done, but they've made it really similar in terms of trading. In this instance, ETH, and it's the only one I've tried because I've only been playing around with FTMO literally for a week or two. Well, from first opening their website 2 weeks ago to actually getting a demo going about a week ago. But I'm going to show you the trade levels. I've sat down with spreadsheets. I should explain what I'm about here. It's basically, first off, I get all my ideas come to me when I'm away from charts. Don't know what it is, whether I'm sat in a pub with friends, or whether I'm walking, or whether I'm dealing with the horses in the fields or whatever, or in fact actually like this morning I've woken up and I always seem to, I don't know what it is, and you hear this often, people sleep on ideas and they wake up with a brand new solution to a problem. So last night I was, as I mentioned, I was practicing with ETH on a demo chart, and it was surprisingly simple. And getting back to the point I was just going to make is that when I get my ideas, I like to share them with you guys, always have done, because I benefit from it. And also, if one tiny, I've said this all my life actually, if one thing that someone says to you that changes your life, it's worth saying. And if one thing that I say on these videos or on my Twitter tweets, as it were, makes a big difference, or makes a little tiny difference to someone, that makes them profitable as opposed to unprofitable, then I like to share it. And one of the things that I thought was really worth mentioning about this this scenario with ETH, and if it works in live, this is why I do like demo trading, and some traders say it's a load of rubbish and a waste of your time, but in this instance I'm familiarising myself with the trade sizes, the lot sizes, the stops I need to achieve FTMO's goal, as it were, of making 10% in a month, I think it is. Then it's worth the effort and worth doing. So there's a few things I'm going to talk about on this video, but primarily let's just get this out of the way with this particular ETH trade. This is, you know, if I can get a trade over the weekend on ETH, or if I can get 2 trades or 4 trades, then it reduces the stress placed on, or the FOMO, or whatever you want to call it, placed on getting that 1, 2, 3, however you calculate your money management using FTMO, for example. It reduces the anxiety and FOMO of those taking those trades when maybe it's not perfect or whatever. So I'm all about reducing FOMO, reducing anxiety, and reducing mistakes, because mistakes cost money, obviously. So in this instance, bearing in mind this is only my second test trade on any crypto, and they do seem to have a real good handful of crypto. So I'll get to the point. Basically, if this moves down to this level here, then it is a perfectly good daily trade for FTMO in terms of percentage of account. So if I can explain, this is a test 70k in English pounds account, which calculates roughly to 100k FTMO account. So in that instance, you have to make $10,000 to pass their sort of criteria for trading, getting a live, if you like, practice account with them, live trading account with them. So in that instance, then I need to make 20 trades a month of $500 a trade, or roughly 350 quid a day to trade. So already you start with a bit of pressure, and people have mentioned this, but if you can get a couple of trades at the weekend, that reduces that pressure enormously, because instead of having to make 350 quid a day, all you've got to make is, I haven't calculated it properly, but let's say £300 a day, or from $500 to $400, because you've got 30 days trading as opposed to 20. That's how I like to break things down. 5 weekdays, you've got 7 days. Another way to do it would be to break your trades down, and I do this as well, break your trades down into bite-sized chunks, like and I will get to the point and the values here in a moment, but instead of treating a day as one 12-hour period, trading period, say for example, or a 24-hour period, whatever you want to call it, break it down into trade sizes. So that's how I went from 1 trade a day to 2 a day, because I could do 1 trade in my chosen time, which is pre-Frankfurt London period, as it were, what I call the positioning time. Then I can come back and do a late end of day, what I call a reversal time, if you like, the average daily range overextended. So let's say the average daily range of this is, what it says here, 10 days, 24,812, and we're currently at 4,128. Let's say you come in and you can see this, a massive daily candle, big red thing. In fact, I've been using that TMT back on my charts again, and I will put it back on my charts again there, because it is very handy, really handy. Because if you see a big red or a big green on your charts, then and I'll show you what I mean if you're not familiar with what I do. If I can find it, bear with. Oh, wouldn't you know it, this demo account, I've not loaded that indicator into, oh yes I have. So there it is there. So if that has no wick and no wick, then it's a massive red daily candle, and I know that it's likely to do a pullback, plain and simple. I like to trade my candles. Okay, this is doing something interesting now, and this is the standard new entry method that I've talked about with this. At the moment, in fact, we'll pull this down. This is a £140 trade. So that's what I was trying to say just now. We have the stop loss is there, and that is 272 British pounds, and the take profit is, I just moved down, as you can see, is 440 British pounds. So you could expect this to perhaps go down to that level there, and this is a perfect setup that I would normally take. So what I would be tempted to do is say, okay, this is half of my daily requirement as we stand now, to fulfill my FTMO requirements. So I would already have, because I calculate everything before I enter, of course, I would consider, if that's my trading plan, to do 2 relaxed trades a day to fulfill my FTMO requirements, then I would have closed the majority of this already and said, that's it, I've made the profit, now I need to do that 2 more times to actually over exceed, as it were, the FTMO targets for the day. And this, as you can see, is a really I know it's only demo, but it's just following all the rules. It's a relaxed trade. The trade was entered because of this situation here, and all the other stuff that I trade as well. You can see these ascending trend lines here. So if FTMO live works exactly the same as the demo, which I'm told it does, then as you can see, we can take a number of trades, make a plan where we can say plan to take 3 £200 trades a day. As it stands, we are at 120 pounds roughly at the moment. I'm not going to bother trying to calculate what a pip is worth and so on and so forth, but this is useful, obviously a useful tool. It tells you automatically what your stop is, and as it was roughly a 1-to-1 reward risk, or risk reward, whatever way you want to look at it. So you could close 3/4 of this and move your stop down and so on and so forth, break even and whatnot. I've got an EA that works in the background anyway on my live account, but this is just as I like to do, test everything. And when you get a candle close, and when I enter a trade, I'm always aware of what the time was. So we were into the early part of the hour. It is now 4:30 in the morning, so a 30-minute candle has just closed. We've just had a 3CR, so I would expect a pullback at this point. So under normal circumstances, I've been well aware, using the candle clock India as well aware that I should have closed the majority of that particular trade and expected this pullback. So all of these things you have to take into account as a trader. I talk about this all the time on Twitter. Timing of your entries and exits, of course, is critical, and that's where the 3CR Indy comes in so useful, because it tells you when you've got a 30-minute close. So if we look at the 30-minute, we will see we've just had a new candle. So you would expect some sort of pullback. It's hit this price pivot zone, the 30-minute open and close, or close and open. As you can see, this is moving down nicely. I wouldn't expect a 5-minute 3CR to affect price that much. So the rules have been followed here. If this works as it does, it is massively encouraging, and another real feather in an FTMO cap, as it were, because as I've mentioned on Twitter and in the past on videos, as it stands, trading stocks with FTMO is it's like a separate strategy, if you like, and a very relaxed strategy, because I like trading stocks. Let's reduce the size of that, zoom out a bit. We are now looking at £155 on this very well, well, I say very well, sensibly calculated trade, in my opinion. Of course, I'm not patting myself on the back there. It's not about ego, it's about money management, as it were. So that's really about the FTMO side of things. Last night I took a little practice trade, first ever practice trade on ETH, and I was gobsmacked as to how well it worked, and it felt no different because of the spreads and stops and stuff like that. That's important also to mention, is that you have to be aware that the spreads are bigger. The bigger the spreads when you're if you're a novice trade, you perhaps won't know this. It will have to come right through here to soak up the spread in a short trade, as opposed to in a long trade you just touch that level and it will close you out, and the same with the stop scenario as well. But in a short trade it will have to go way through there to soak up the spread before it closes. So it's always sensible to be aware of that. But I'm going to close. Well, let's see if we can get down a little bit, but this is only a demo, so it's not really that important. But I'm going to close a percentage of this. In fact, no, I'll just let it run, do its stuff, see if we can get down to there, and then at least we can learn about the spreads in real time if it does get down to that level. So let's move that up a bit. So that would be almost in this scenario, and I might as well say about the size as well. This is a 50 lot rather trade according to FTMO's leverages, which is 100 to 1 I think at the moment, and the way it trades. But that is, and you're not even getting remotely near the margin requirements in this demo environment. Hopefully it's the same in a live environment, but that will be tested thoroughly as well eventually, should I decide to open a live account with it. But let's get back to the nuts and bolts. So this is working well, and the point being, if you can get 2 trades or even 3 trades at the weekend using strict rules, without fear of missing out, FOMO, and without all the anxiety and stuff, then you have got a huge amount of a head start on fulfilling FTMO's challenge, if you like, by not over trading, not over leveraging, not oversizing, because because you know you're making a plan, like I talked about before, the ADR situation. If this was all this was overextended here, say it's 28,000, and if this is full, no big wicks, and it's just red, then you can calculate that it's likely, depending on, let's suppose this was a daily chart here, if it's all the way down here, then you know you've got very likely a bounce to the long side. Well, daily's a bad example, but let's say you're looking at H4 or something, and it's smacking here, and it's a big H4 candle that you'd look on your dashboard, then you know you've got a good chance for a bounce. And I'll talk about that in a moment as well. So yeah, looking great, and that's the whole point of this video, guys. The more sensible, planned trades that you can sort of, you know, make a plan for, as it were, the less FOMO and anxiety you should get. And if you can get a few of these in at the weekend, then instead of having to make £350 or $500 in a day, I may have calculated that wrong, it might be 400, 500, I don't know what the dollar to the pound is, it's horrendous at the moment, but let's just say, okay, you've got to make $500 in a day, and this represents a $200 or $300 trade, then you are very, very on your way to fulfilling your day without being stressed out. And 7 days worth of trading, if this proves to be good, is absolutely excellent. So this is pulling back a little bit, but that's just normal trading, and as a scalper I would have been well out of this and well happy with my results at those levels. So that's food for thought. The other thing that I was doing that came to mind when I was just looking at this chart was these ascending trend lines. Now I know people get all bent up and twisted up about candlestick levels and so on and so forth, and I noticed something important and worthy of note here as well. See, this is a 3CR calculated using Aaron's fantastic indicator, and you can see the low of this candle, the wick there, has been identified perfectly well. That's the penultimate, that's the ultimate high, penultimate high, ultimate high, that's an uptrend. broken by the new downtrend and finally closed through here. But what doesn't get mentioned enough, but I do talk about, is what I call now the line chart 3CRs, which means the open and close, that pivot zone, PPZ, or flip zone, whatever you want to call it, has been breached by this previous candle here. And that's important, because when you look at the line chart, you will see the line chart low now is there, and that candle will have closed below it, and that's what I call a 3CR, line chart 3CR, and that means that this is tradable, as opposed to waiting for the close there. If you draw your level on the open and close and that candle closed below it, that is what I mean by a line chart 3CR. It also crosses over to trend lines. So when you get, I'm not having a dig at wicks don't lie and everything, and they talk about the wicks, and they talk about their levels of support and whatnot. I calculate my support levels there. They talk about the lows of the candles, and to be fair, I did as well with the 3CR levels originally, and they both have significant meanings, but I think the close, this area, is more important. It makes a lot of sense, obviously, than just a tiny little wick down the bottom there. So line chart 3CR and wick 3CR, and then it does follow through with the trend lines, because you'll notice these trend lines go through the opens and closes of the candles here and here, and all that's happened is I've put them on the line chart levels. So once again, the line charts, in my opinion, become more important, because if a candle is closed below that ascending trend line there or here, then the trend line, in my opinion, has been breached. But if you had drawn your trend line on the extremes of, say, a 5-minute chart, they would look totally different. So this has given me a really good example of how to determine trend lines on higher time frames. Sorry, I am half asleep. It is the middle of the night, but when I get these ideas, I like to make the videos at the time. I'm trying to take the scroll off, and then look at this particular one here. So once again, on a 5-minute chart, your extremes would mean you draw the trend line at that point, which gives you a whole different outlook on where the level has been broken. So hopefully, I haven't really done this before, or not very often, so hopefully that shows you the big difference and what I mean by line chart levels and trend line levels. Same goes for this cross point here. The lower the 5-minute time frame would suggest that the break of the low is at that point, and this is what I mean by moving up the time frames. You can actually move your break levels higher up, if you know what I mean. So that trend line break is lower down, that trend line break is lower down, that horizontal level break is higher up on the 15-minute. So higher up on the 15-minute, higher up on the 15-minute. I hope that makes sense. So if we go back to the 15-minute, it can make a world of difference to your break levels, if you like. So this trend line would be considered broken here, and this trend line would be considered clearly broken by that candle there, which gets you in a whole candle earlier, which can make the difference between making money and not making money. So I've covered everything I wanted to do, apart from the 34 EMA break, which was the reason for entering this trade, but that was pretty much covered in the previous two videos about the 34 EMA. But as you can clearly see, the 34, that little, and I'm going to strengthen this line up with what the all averages the all averages indicator that I use on is on my pinned tweet. As you can see, as a scalper, I should have been out of this. And notice also that those two those two significant levels due to Aaron's indicator were where price bounced. No coincidences there. And once again, you will see if you change your time frame, say from the, we might have a different level on the 3CR as well. In fact, we haven't got one in here, but you'll often find one that will have been respected way over on the left hand side that corresponds with the bounce levels, and that's how I teach myself, as it were, the significance of all the levels. There was one up there where all this congestion had happened, and as you can see now, this is probably going to be closed. It is only a demo trade, so it doesn't matter with a loss now, but that's what scalpers do: get in, get out, and don't get greedy. So I've covered virtually everything I wanted to cover on here. I have gone over the time of a normal video of mine, but hopefully it was has some value to you. So the moral and the point of this video was to bring your attention really to the tradability of I'd actually given up on live trading, pretty much given up at the weekend, because it's too much of a fag trying to calculate all the different brokers' ways of calculating their pip sizes for these things. The leverage changes from my weekday leverage for cryptos, and it's too much of a fag. You know, at the end of the day, I've gone from 1 or 2 trades, safe trades a day as a trade plan, to multiple now. You know, I think there's up to a dozen at least that I would trade daily, and now we've even got a few more with the stocks on a sensible platform, as it were. I do like the execution on the FTMO side as well, and this now has revitalized me in terms of the ability to trade cryptos, because it feels no different than just trading a slightly larger than normal spread FX pair, to be honest with you, which it doesn't feel like at all when using IC Markets, one of my main brokers, and any of the other live brokers that I have as well. You know, trying to trade cryptos with them is not worth the aggravation, to be honest with you. But if we are, you know, if I were to trade this on a weekday, and not the cryptos, but using this platform, as it were, this setup on a weekday, familiarity is obviously very important. If the weekend trading feels no different, then that is a real bonus, in my opinion. So people talk about all the benefits and the opposite to benefits, whatever that is. As I said, it's late in the night, to pros and cons of FTMO versus the other, and I'm not affiliated with them at all, the other prop firms, as it were, funded firms. Then this is definitely a plus point, in my opinion. So comments are always welcome, of course, and any drawbacks that I may have missed that you feel are important about this particular revelation, as it were, or observation, then please do let me know. But this trade was entered following all my normal rules, the break of the 34, and yeah, I'm going to make this an extra long video because there is actually another point I wanted to make about the dashboards and this new 34 EMA entry, as it were, and 89 EMA using the TMA slope, and that is how I found this useful, because every day when I come in, I check my daily dashboard and I check my H4 dashboard, and what was really noticeable this afternoon when I popped back to my charts was the The another revelation is that when I've got a big H4 bar, for example, and I'm thinking, that's a 3CR down, this should bounce, and it did exactly what I expected it to at that last H4, second from last H4 of the day. When we're here, now, it stands to reason we're looking for a reversal. So any of these big H4s, 3CRs, standard stuff, they are, these were worthy of a tweet and a whole possibly video about how tradable these things are. Big H4, no brainer, reversal. And that's what I was talking about just now about the daily charts. Big red, that TMT daily candle thingamajob, big red one of those at the end of the day on a Friday. Then I want to be looking for a potential pullback on the Friday evening, or even the Monday morning or whatever, but always be careful. But 3CR up, massive 3CR up, there's the penultimate low, the ultimate low, there's the close below, above rather. This also treats, these are just indicators to go and study further, but I did actually trade that. That is a clear supply area and big H4, and down it goes. Now, what's important about all of these and how it transmutes, as it were, if that's the right word, to the 34 EMA entry and all the other entry styles, ascending trend lines and descending trend lines, so on and so forth, is that when it's up here, all you got to do is look on your charts and look at the setup with regards to the dragon, the Sonic R Dragon and the 34 EMA, and just wait for it to present itself. It couldn't be simpler, in my opinion. The opposite for long trades: let it wait to present itself, and you're good to go. So in a live environment, you've just got in, you've set your alarm clock to or your watch alarm or whatever you have, to remind you shortly before the close of the H4 bar that you come and have a look. This might be a totally rubbish bar here and you're not interested at all, but this would be a massive interest. And you've only got 3 or 4 of these in your trading 12-hour trading day, so it's no hardship just to set your alarm short before and look at your phone or your tablet or whatever you do and just see whether there's a possibility for a reversal. Then you go to your main charts, you do your analysis again, and then you just wait for that that perfectly planned execution of our 34 EMA cross, the pullback. It might be a 3CR and then continuation. That was another light bulb moment for me yesterday afternoon, getting back to charts, and didn't get back most of them to trade them because I was out yesterday, but I did actually follow through, and you could see this pound New Zealand dollar scenario, there you go, it's taken that out, present itself perfectly well. Pound New Zealand dollar, it wasn't on this platform that I traded it anyway, so it's not open, but if we bring the chart up, pound New Zealand dollar, let's have a look at that H4. Sorry, this has been a much longer video than I intended, but hopefully now you've seen the tradability of ETH. So that's the H4, that's the 3CR up, that's the supply area you can clearly see there. That's a good enough reason to expect a pullback. So if we drop down bar by bar or time frame by time frame, that was the H4 close up there, and this is the sort of pullback scenario. You can see it bouncing around on the pink 89 EMA there. H1 clearly started to pull, weaken off, as it were. So it couldn't be simpler, really. Then you can start to see a divergence scenario. I was watching that as well, coming into the situation. You know, equal highs with lower highs on both your momentum indicators there. And you know, I study all of this stuff very carefully. You know, each of these grey bars and this green bar obviously equates to that, but the grey ones are showing the momentums falling off to the long side. What are we on? M30 now. M33CR down here as well, on to the 89 EMA. So you know, we can just draw a cross line on there. So by the time we've moved so we're watching this bar by bar obviously, so that is a significant move there. On the 15-minute you're banging into your 34 EMA. Remember, the 30 and 30 and the 15-minute are vastly different 34s and 89s than your divisors by 4, as it were. You know, an hourly into a 15-minute is much more sensible, so that needs looking into. But for simplicity, you know, in terms of, I need to do it myself because they're incorrect on the 30-minute. There's not enough 30-minute bars in an hourly bar to make the transition between the two EMAs as you switch time frames correct. But a divisor by 4 makes it perfect, as it were. So we've got another 3CR here. Momentum, as you can see, is clearly changed. This is the interesting bit now on this 15-minute chart. You've got your change of colour as you go through the 34 EMA, the little grey one. And apologies for being such a long-winded video, but if I made it two-part, I probably would never get round to making part 2 because I don't intend to stay awake much longer tonight. Have another snooze, cat nap. So there's your 3CR, there's your trigger into the 34 EMA. This one's not perfect, but it's still a work in progress. I did make that clear yesterday, the break between the 34, and as I made clear as well yesterday, you know, you need to put your own screen time into these ideas that I put up here. You know, you go back and do the hours and hours of work checking where the 34, it may well be that you could, because obviously the 34 EMA wasn't designed for to be used this way, as it were, when the guy put together this dragon. It may well be that you change it to the 33 or the 32 or the 36 and it curve fits what you require. Obviously every instrument is different, stocks compared to indices, compared to cryptos, etc., and FX, and even every FX instrument will be slightly different too, because of spreads. So, you know, these are a catch-all and it works really well, but you know, we're all specialists at what we do, 5-minute traders, 1-minute traders, and so on and so forth. So consequently we need to adjust our tools slightly to fit what we do. But getting back to this particular scenario, on the 15-minute, we can clearly see this is a lovely reversal setting up. That was all started from that 4-hour bar and then a quick alarm clock setting, as it were, and you found a perfectly planned strategy to trade those end of day reversals, as it were. And you know, that's what I'm all about. So if you can build a trading plan for the middle of the night, the Asian session for me in the UK, and then the early morning, you know, very early morning, pre-breakfast if you like, and then another one maybe at 10 or 11 o'clock in the morning based on the 4-hour closes, UK time again. And remember, gold closes now later than the dollar or FX pairs, so that gives you a double chance at that. And sorry, there's a really noisy pigeon going on just outside my window, just distracted me a bit. So here we have, that's it. We've talked about the ETH on the cryptos, we've talked about the new strategy, we've talked about the fact that the H4 dashboard observations fit perfectly well with this new TMA, should really call it, as opposed to the 34, the TMA strategy, and that was a perfect setup to the downside. Now, there was also the 3CR, so as I explained in that small ETH trade there, that any 3CR will cause a bit of a pullback. The pullback will be smaller in terms of pips the lower the time frame you go, 5 minute, 15, and so on and so forth, and that gives you plenty of time then to prepare yourself for the lowest drawdown entry, which would have been at this point here, because we've busted, pulled back, broken close perfectly with a low, tiny pullback consideration for the entry. At this point here, we are below areas of supply and demand, support and resistance here. Clearly support, remember I talk about the open and close as opposed to the extreme, and it's tested it, broken it, come back and tested it, and then continued down. So another perfect example of a strategy trade that we take, and this is why trades are everywhere, and this is why, initially, and this is the last bit of this video really, FTMO looks a really daunting and dangerous, and I've heard various traders say that FTMO is, even myself, but if you break the whole thing into bite-sized chunks, as it were, for $150 trades a day, say for example, bust your $500 target for finishing the FTMO challenge, as it were, and even more so if you can throw a couple of trades in at the weekend, which again, as I say, shouldn't be a massive hardship. It's not like you're sitting in front of your charts all day long. All you have to do is set your alarm clock for those H4 closes, or you might trade something that has an H2 close or an H8, an 8-hour close, just plan your day around that, and it shouldn't impinge on your life as a new trader, and it should then give you a much more stress-free, planned method of fulfilling the FTMO challenge. So loads and loads of points covered in this video. Apologies for it being so long, but it is I like to make these things when I think of them, and as I see this, we've got the clear 2B reversal type levels, lines that I like to draw, and even that then becomes an ascending trend line, clearly broken by the descending trend line, and the entry once again fulfills those rules, the 2B reversal and 1, 2, 3 lower high reversals, for the perfect entry. And as you can see, all this has been about just faking the long traders, the bulls, and loading up with what I call discounted orders at a higher level. The algo's driving price up so they can load up with additional sell orders, and then finally the buyers are all exhausted, and the sellers just pile in, or the little sell orders, should I say, by the algos all do their job. So thanks for watching, have a great weekend.